Let's talk about this piece from CNBC that came out this morning. It's titled, "The American Banking Landscape is on the Cusp of a Seismic Shift."
It's an attention grabber.
The next sentence is even more attention grab. You expect more pain to come.
Well, let's
Fear
talk
porn
about
or legitimate concern.
American banking landscape, seismic shift. Well, let's talk about it, because maybe you could consider it a seismic shift. I don't think that we are talking about a change in the fundamental way you and I bank on a day-to-day basis, but I think you could put together a pretty compelling case for a large-scale consolidation of smaller banks across the banking industry over the next few years. I think you could put together a case for that argument.
Let me ask you a question.
I don't know if that represents a seismic shift or not, but
Let me ask you a question. Why do we need banks?
Why do we need banks? Provide access to capital, borrow money, and secure access to cash.
Let me try again. Why do we need banks?
Got it.
Why
do we need 4,000 of them?
The
is
way
another way of asking
that
question.
the banking sector in the U.S. is currently regulated, and especially with how it's likely to be regulated after the Silicon Valley Bank blow up,
Yep.
there's no difference between any of these banks. There's no difference. You're pretty much told by the Fed, the Treasury, the FDIC, this combination of all these different regulators. You're pretty much told this is how you have to run your business so you don't die. And if you do that, you can earn a nice living, but it's going to be exactly how we tell you to earn it.
Mm-hmm.
You see this because when you go and look at different banks, they don't really offer different products at this point.
Well, Silicon Valley, I think, you could argue they were offering a very different product.
Yes, that product was bankruptcy.
Yeah.
Okay, they went out of business because
Of
they
their model.
didn't know what they were doing.
I think that's the point that I'm making is they offered a very different business model than Bank of America, JP Morgan Chase, or pretty much anybody out there, which was high-end customer service to very high-end customers, and it blew them up.
People listening will say, Chuck, like, I need my small community bank. Like, I know the bankers there are allowed to make the exact same types of loans as the next bank and the next bank and the next bank and the next bank.
Mm-hmm.
They don't really get to do anything special. They have a relationship with you, which they could still have if they were working with any other bank. But they don't get to do
Arguably.
anything. They can't do anything special.
No.
There's not much bending of the rules like there used to be. It's not like 1920 where you walk in and you say, "Hey, Jim, I can't make the payment on my mortgage this month. Is it okay if I just pay you double next month?" "Oh, no problem, Tommy. It's fine. You do that at any bank. Like, you don't have...
Yeah, you're in default and you're in trouble.
You don't have the Wild West of banking anymore is what I'm getting at. There are minor differences around the edges, but they're cosmetic. And so this is one area. It's strange for me to say this because normally I'm Mr. Competition. I'm like, hey, we need more competition everywhere. The U.S. doesn't need 4,000 banks. It doesn't need 4,000 banks because they all do the exact same thing. It's, oh, hey, I can go to this bank and get 4.15% on a money market account versus 4.10. I mean, people are like, oh, like that's a big difference. It's the same product. They don't do anything unique.
So I guess one of my concerns about consolidation has nothing to do with deposits and access to a checking account versus a savings account. But I do openly wonder, let's say that consolidation went way far in the other direction, which is not my actual real anticipation.
Which direction?
Towards mass consolidation to the point where we had basically 10 banks left.
Yes.
I would not be worried about the deposit side of things. I think there would still be some competition from come to our bank for this checking or money market rate versus that one, and we can offer this. I would be a little bit concerned about a if all the banks were the size and scale of Bank of America, J.P. Morgan Chase, and those, would we have lending? Would we have good lending occurring across the entire spectrum of all areas of business, small businesses, large businesses, individuals, etc.? I think my answer might be no. And so I think that there is not much of a compelling argument for what banks are doing on the deposit side of things. Technology is kind of garbage. Across the board, I'm not terribly happy with what banks do on the deposit side. I think they serve a pretty important function with making loans to smaller size entities. I think that's an important function for banks to serve today.
Yes. But we don't need 4,000 of them.
Yeah, I agree.
It's, if your example is, hey, I don't want to get down to 10 banks, I agree with that too.
Yep.
I don't want to get down to 10 banks. But getting down to
2,000.
400 banks, that's still plenty of competition.
Yeah.
So
let's take the assumption then. I mean, I'm looking at the S&P 500, the S&P Dow Regional Bank Select Industry Index, which so far this year, no big surprise, is off about 30% and has seen no meaningful recovery since the banking crisis. So let's operate on the baseline assumption that there will be bank consolidation. What do we think this means for the customer, the investor, the regulator, us as a country to have fewer banks out there?
I think for the investor, which is kind of a separate piece than the consolidation piece, I think banks are going to continue to look more and more like regulated utilities, in that there are going to be more rules about what you can and can't do, more capital requirements. It becomes harder to lose money as a bank, but it becomes harder to have outsized returns that differ significantly from your competitors.
Yep.
And that's kind of why I get at, why do we need all these?
Yeah.
You know, they're all being, the government tells them what to do.
Right.
The only thing that's different is this sign's red and this one's green and this one's blue. And
one of them gives you umbrellas, the other one doesn't.
The other one gives you 46 pens.
Toasters.
You know?
So for the customer, I do think that there's an argument that for those who currently do business with smaller banks and are really happy with their customer service experience, I'm not sure it's still going to be there 5 years from now in the same way. I don't think that, to your point, I don't think that the person who is working as a teller for Portland, Maine Regional Bank XYZ is going to have the same ability to deliver great customer service if they're working for J.P. Morgan Chase. I think it's going to be a fundamentally different relationship.
I'm not sure that J.P. Morgan Chase, and I know you're just using them as an example.
Sure.
I don't think the big banks are going to be the acquirers.
Right.
Because I don't think the Fed wants the big banks to be.
Yeah.
Look no further than the Silicon Valley Bank blow-up.
I guess
Fed
my
and the
point would
FDIC
be,
did everything possible to not have J.P. Morgan or Wells or someone else who's huge buy up the
I
remnants.
guess my point would be whether it's J.P. Morgan Chase or a bank that's 1/20th the size of J.P. Morgan Chase, I suspect that relationship you have with your small regional bank, if it gets acquired by anybody, is going to fundamentally change in a probably negative way in your view.
Yeah, so again,
technology might get better on the other hand.
There's a long way between the J.P. Morgans, your top six banks.
Yep.
J.P. Morgan, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, Morgan Stanley. They're the only ones with over $1 trillion in assets.
Mm-hmm.
Then you got another group in that, hundreds of billions. U.S. Bank Corp, Truist Financial, PNC, Charles Schwab, TD Bank, Capital One, other large banks. You get down to like the 30th, 40th biggest bank on the list. You got Webster Bank is the 40th biggest bank on the list.
Yep.
Could I see something where Webster merges with New York Community Bank, similar geographic profiles and things like that, and now you got a $200 billion bank that still is somewhat local? Those are the kinds of things that I see happening, much more than, hey, Morgan Stanley is going to go and buy up, Eastern Bank or whatever. I don't see that happening.
Yeah, I'm with you. I don't think there will be much more in the way of that. There will still be those distressed sales that are probably going to happen over the next year, and I think many of those will end up going to the largest banks because they're the only ones truly capitalized well. There's a reason that the only buyer for First Republic was J.P. Morgan Chase.
Right.
It's the only one healthy enough to do it. So depending on the size of the failure, depending on how distressed it is, I could see them picking up a few. But in either case, if you're banking at one of these small banks, I don't think we should be surprised to see consolidation happen. And that's never a fun, easy process if you're banking with that bank that gets consolidated.
There's some fun banks in the top 100, at least in terms of names. You know, the one that still gets me is Fifth Third Bank. Well, where's the Fourth Third Bank? And shouldn't there only be one third bank, because otherwise you would just be the fourth bank or the fifth bank or the sixth?
Yeah.
Fifth Third Bank. It sounds to me like you should be the eighth bank.
I'm going to start 1 2/3 bank.
I'm gonna start 2 2/3 and take that.